we are joined by Mr. Rajesh Baheti, MD at Crosseas Capital Services, who's joining us from Mumbai. Mr. Baheti, thank you so much for being with us on NDTV Profit. Do you think the markets have now run into a congestion area? They ran up too fast, too soon? Or do you think, is there a correction possible? Or do you think because of domestic flows, we will just see a consolidation and no big correction?
Yeah, so no markets will go up in a straight line. We've rallied quite a bit since the budget. We were 85 thereabouts, and we went all the way to 9,000 yesterday. So 100, 200 point correction is par for the course. I don't think there is any chance of a bigger meltdown right now, for the simple reason, A, that the US is experiencing a Donald Trump honeymoon rally. B, I think domestic flows are very, very strong. There's an extended slump in the bullion market. The property market is not doing well. So, all that savings that we're generating is finding some excessive allocation into financial assets. And that's a great shift for the long term for our country, that finally, we're seeing some allocation towards financial assets. And I think this is likely to continue. So for the moment, I think the market may not go up the way it has gone up, but at the same time, I don't think there's too much downside in the market for the moment.
All right. What would be the next trigger for the markets then, for whichever way they head? How important will the state election results be?
Well, actually, I'm on the side that feels that there may not be an extended impact of this election. I think everybody knows that Punjab is going to be extremely challenging for the ruling party. So everybody's kind of written that state off. Uttar Pradesh, because of the alliances, you might get some difficulty in forming a government there. But I think any effect of maybe a less than ideal result for the BJP will only result in a much needed correction, maybe 100 and 200 points to 8,700 thereabouts, and the market will then revert back on its path of slow and steady up move. And I think we're likely to see a new high in excess of 9,100, 9,200. Before June this year, before I think the onset of GST, because that could present fresh challenges. And despite the fact that there's great optimism on the GST front, I think initially there might be a few challenges and might result in the results of companies getting affected negatively. So I think post the implementation of GST, you might see further challenges for the market in terms of how far it can go, or a serious reaction. Till then, I think any dip would be a buying opportunity.
Right. So if you're seeing levels, new record highs for the Nifty, or closer to about 9,000, 9,100 by June, which are the stocks or the sectors you think will power the Nifty on to get to those levels?
Well, I don't look at stock specific too much, but I would tend to think now, given the fact that there is some news of buyback activity in the IT stocks, you might actually have a bit of a rally in the IT pack from here on to June, because A, it's going to be reasonably safe to do that in a market that's already near all-time highs, and B, I think there is some chance of corporate action in terms of buybacks even in some of the other second-rung stocks. So I think some of the IT pack might actually keep the market afloat to about 92, 9300 levels. Reliance has been a leader of late, but I don't know how long this can continue. Bear in mind one thing, that over the past we've noticed that Reliance, when Reliance makes that move, it's usually towards the end of a bull market. So I don't know whether this time there's some ominous warning there, but I think the market looks set for 92, 93. Some of the defensives I think might start doing a little better from here on. So pharma and IT might be a choice, because A, they give you defensive play also, and B, from here on, because of valuation, I think there's some comfort.
Rajesh, what do you do with Reliance Industries? What's happening over there? such a big move? Do you think initial move was led by short covering?
Probably also the fact that there was some news that Jio is going to, finally be charging tariffs. I really don't know because I don't think anybody is able to pinpoint how much money Jio is going to make initially in the first year of operations, or whether it will make money at all. And even if they do start charging, what is the dropout rate of customers they've acquired? Because if you throw a freebie, then acquiring customers is not such a great job. So I think, the fact that they've got 100, 200 million customers is only because they've announced these freebies. And once those freebies end and other players also match some of the plans being offered by Jio, I think we'll have to look at dropout rates in terms of how many customers they are able to retain. And as well as, Reliance might also be getting a push, because all the retail stocks have got a little push recently due to the oncoming IPO of DMart. So I think it's just one of those things. A lot of short covering might have taken place, but where Reliance goes from here from these prices, I don't think it's an underpriced stock. At best, it's a trading play, 1350, and maybe back to 1150 on the downside. So maybe that 200-point range in Reliance that was from 900 to 1100 might have moved now from 1100 to 1300. I think that's the most likely story in terms of where Reliance is going to end up.
Right. And in terms of any other large cap movers that you can identify, do you think markets are going towards stocks where there is under ownership? So you got Idea, which started to buzz. Bharti has done decently well. You even have names like BHEL, which have done well. So companies that were under owned have actually done better.
Well, in a bull market, you would see sector rotation. So, once people have made money in other stocks, they would tend to look at stocks which are under owned. I don't necessarily consider those stocks a good buy. So from a trading point of view, yes, if there's sector rotation, you could have some kind of short covering because there's a blowout rally that is happening in the markets. You would likely to see short covering, and that short covering can take these stocks which are under owned up quite a bit. So, but whether they are make good sense to put your money in for the long term, I seriously doubt. So from trading point of view, fine, you could get 5-10% more in these stocks, but beyond that, I think I have serious reservations on the entire telecom story with the kind of price wars that we are seeing. So you can see the stress on promoters and their comments coming. It is showing. So I would be very, very careful at what levels I would buy these stocks.
A lot of M&A activity or M&A buzz has increased in the market. Do you think it's just because of lack of ideas that, any small news which is coming in, markets is paying too much attention to it?
Oh, that's the way the bull markets function. So we are close to all-time highs. Any good news is bought into, any bad news is discounted. That's par for the game. For as long as the market is bullish, the market is looking at new highs, I think people are going to get excited by little news. And that is just part of the psychology that accompanies a bull market.